Assalamu alaikum students. So today we have changes in equity and the terms numerics regarding it. So let's start. The first thing they mention is that CAM Limited provided the following information, and the start of the year is 1st October 2015. The important thing to note down is what is meant by issued share capital, ordinary shares. So issued share capital is basically the capital that the shares that the company has issued. Then we have general reserve pension plans. They are basically the funds that have been retained by the company for future purpose or for bad times. Then we have debentures. Debentures are part of long-term liabilities, and they are for expansion plans, and they are usually over 25 years time of period. They are basically certificates, these debentures. So this is the long-term liability that is recorded in the equity part. Then we have profit for the year, that is very common, the profit that has been earned during the whole year, and interim dividend that is paid on ordinary shares. So basically, there are two types of dividend, that is the final dividend and the interim dividend. So interim dividend is paid during the year at any time, usually after 6 months, but it can be paid regardless of the. So there are some adjustments in this question. That is, first one, on 1st November 2015, 30,000 ordinary shares of $1 each were issued, and then we have transferred 80,000 to general reserve and paid a final ordinary dividend of 0.2 per shares on all ordinary issued shares. So let's start with the question. And what do you mean by statement of changes in equity? It's basically what changes have occurred during the year in the equity portion of the company. These all are made up of the equity portion for the any respectable company. So the first thing is, as they have already given the format to us, they have already written the balances here, that at 1st October 2015 we have 70,000 as share capital, we have general reserve as 40,000, and 92,000 is the retained profit that they have already given. The total of the equity is basically 202,000, that is the equity, and debentures are long-term liabilities. So total equity will be when we add them together. If we start with the share issue, so share issues, we know that 30,000 ordinary shares at $1 each are issued. So it will be $30,000 that will be added in the shares issue. There will be nothing adjustment in the retained earnings and general reserve. So just add 30,000 in the total column, that because the shares have increased and the shareholders has taken the shares and the company is receiving cash against the shares that they have issued, basically for the finance purpose. If we move forward, so we have to add the profit for the year. So this is 92,000 is the opening retained profit at 1st October 2015, and during the year the company had earned 75,000 profit for the year. So this will be written here, that is 75,000 retained profit that will be entered in the profit section, and general reserve and share capital will be left blank. The next important thing is the transfer to general reserve. Basically, the company transfers some amount, some funds to general reserve for future purpose, for bad times. If the company is facing economy is facing financial, transferring 80,000 to general reserve this year during the year. So we are going to add 80,000 in the general reserve, and definitely this amount is just for safety purpose. So it will be subtracted from the retained profits. So this amount will have no effect on the total balance, as we can see that we are subtracting the 80,000 from retained profits and entering it into the general reserve. Then we are also paying the interim dividend that is paid within the year during the year. So interim dividend, the amount is already given, that is 7,000. So we are going to subtract the 7,000 interim dividend from here because we are paying it to the shareholders during the year. And then there is a final dividend that have to be calculated, and that is the final dividend to all the issued shares at the end of the year, that is 30th September. So in order to find that, it means that as it says it is 0.2 per share, so it will be 0.2 multiplied by the number of shares, that will be 70,000. So it will be 70,000 times 0.2, that will be $14,000, and that is the final dividend that we have paid by the company to the shareholders. So this will be 7,000 in total subtracted and 14,000 total subtracted from here. Some important things to note down here, students, is that this $1 means that the share is the par value, the face value, or the nominal value. All the three terms are used: the par value, face value, and nominal value. All of the three terms can be used. This is the cost of that share. So $1 is the share for par value, cost value. So which means that 70,000 divided by 1 will give us 70,000 number of shares. The share value divided by the dollar value will give us 70,000 number of shares, and that is why I have multiplied 70,000 number of shares with $0.2 as they have mentioned in the question. The final thing is that you have to find the closing balances. So for this, you are required to addition all of the things here or subtract it just to find the total balance. So let's find the total balance here. So 70 plus 30 will be 100,000. That is 1 lakh. 40 plus 80 will be 120,000. And 92 plus 75 minus 80 minus 7 minus 14,000 will be 66,000. And also the addition of all these three total and this column will also be the same. So for double check purpose, you can solve from both sides. This is going to be 286,000, and from this side also 202 plus 30 plus 75 minus 7 minus 14, you're again also getting 286,000. These are all the things that should be necessary for solving this statement of changes in equity. I hope you got some concept from it, students. Thank you. Have a nice day.